By the end of this video, you will learn what is market structure, how to identify healthy trends, and how to spot a change of trend. Market structure is the direction of the market. This includes the trends, the patterns, and the behavior. There are three types of trends in the market. One is the uptrend, also known as bullish trend. The second is the downtrend, also known as bearish trend. The third is the ranging trend, also known as sideways trend. To identify a bullish trend, you need to see a series of higher high and higher low. So when you see a series of higher high and higher low on the chart, then you can easily say the direction of the market is bullish. For a downtrend, you need to see a series of lower high and lower low. So when you see a series of lower high and lower low, you can easily say the direction of the market is bearish. For a ranging trend, you have to see price move between two price levels or zones. For example, you see price tagging a particular zone up and also tagging a certain zone down multiple times within a certain duration. Then you can conclude that the market direction for that particular currency pair or asset is ranging. Let's talk a bit about trend lines. Trend lines are levels used in technical analysis that can be drawn along a trend to represent either support or resistance, depending on the direction of the market. Most new traders have issues when spotting an emerging trend. They are only able to spot a trend when the trend have manifested, have gone a long way and maybe about to change direction. So right now, I'm going to show you how to easily spot an emerging trend. All you need to see is the first three swing points in the charts. For example, the charts you are seeing right now, I've marked out the first three swing points. The first one here, down here, the second swing, which is the one at the top, and the third swing, the one retesting the trend line. So when you have these first three swing points, you can start plotting your trend line. This is me trying to identify or spot an emerging bullish trend. Now for you to say a trend is starting, the first leg of the momentum has to go above the previous swing high. That is for a bullish trend. For a downtrend, the momentum has to go beyond the previous swing low. So when you have this 1, 2, 3 points, you can start plotting your trend line. With that, you'll be able to spot an emerging trend early. There are healthy trends, there are unhealthy trends. Unhealthy trends are trends that will not last long and it will break off the trend line. But an healthy trend is a trend that will respect the trend line and keeps moving in that direction. To easily identify unhealthy trends, you need to gauge the distance between price testing the trend line. On this illustration, you can see that it takes time for price to come back and test the trend line. The first one, it took 7 days, next was 14 days, after that was 21 days, then 28 days. So you can easily say this is an healthy trend. The longer it takes for price to come back to retest a trend line gives you a story that this particular trend is a healthy trend. To easily spot a possible trend line break is when you see price testing the trend line very often. So let's say price was taking time to retest a trend line. All of a sudden, it starts testing the trend line more often. Instead of maybe 14 days, 7 days, it's now taking 4 hours, 1 day, 1 hour, and be testing that same trend line. This suggests that there is a possibility that that trend line is going to break and there will be a change of trend very soon. So you need to know this. So far, I've been able to show you how to spot an emerging trend and how to know when a trend line is most likely to break. On the illustration right here, you can also use a trend line to validate a change of trend. Like what you see on your screen right now, we see price closing above the trend line, then retesting. Retesting that trend line gives a validation that the trend has changed. So this is how you can use your trend line to validate if a trend has actually changed. Here are a few tips to plotting effective trend lines. Focus on the bigger picture. Don't cut the candlestick bodies. Include the candlestick wicks, they are very important too. And never force a trend line to fit. If you would like to learn more about how you can stay profitable in trading, then I would suggest you enroll for the Masters of Swing Trading course. It is a beginner to advanced trading course, and you will learn a proven and a winning trading strategy, how to analyze and execute trades with precision, advanced techniques to maximize profits even in the most volatile conditions. To learn more about this course, there is a link in the description below this video. Click on it and enroll.